Do you know silver in India is trading at around 177 per gram, but the global spot silver price converted to INR equivalent is much lower than what it is. The gap is pretty real. Kotak recently paused fresh silver inflows into its silver ETFs. Let me break you down why and how you can use this to your advantage long term. In India, silver costs around 177 per gram. Globally, silver trades in USD. Right now, the spot silver is trading about 36.58 per ounce, which translates to $1.18 dollars per gram. If we convert this to INR equivalent, taking approximately USD to INR at 88.75, global spot in INR works out to 105 to 110 per gram. So, India is paying a premium of 60 to 70 rupees extra per gram, which translates to roughly about 50% higher due to the local frictions. That extra cost is not just the markup, it reflects supply constraints, import costs, logistics, duties, and local scarcity. Here's what causes that premium. Let's break it down. Shortage of physical silver in the domestic Indian market. Local retailers, traders often run out, pushing up the prices. Now, the second point, import costs, duties, logistical chain costs, transporting, purity checks, handling, all these add up to the cost. Number three, demand pressure. Festive seasons, investor demand, industrial use, all push the localized, spikes. Number four, very important thing, rupee exchange rate fluctuations. When INR weakens, imported silver becomes very expensive. These make the Indian price diverge significantly from the global spot benchmark. Every silver ETF must be backed by actual physical silver stored in the vaults. When big fresh money comes in inflows, the ETF must buy real silver to issue the more units. At today's inflated Indian rate of 177 per gram, imagine that cost is significantly higher than the fair value. If new investors enter at these prices inflated levels, they are taking on the downside risk. That's why Kotak paused a new lump sum and switched in investments into silver ETFs so as not to force these investors to overpay. Existing SIPs or systematic flows may or may not be impacted, but depending on the fund's decision. Markets tend to correct when the premiums widen too much. We pay we may see a silver in India pull back if imports ease or local supply improves, narrowing the premium. But that dip can be a buying window for discerning investors. So instead of lump sum entry now at the peak, consider staggered